Yes. Perfect.
Yes.
Okay. So this chart's gotten a lot more interesting in the last year. And I really just show it to show that, as our average age has increased, average life expectancy has increased. That long-term care that's needed at the end of life is significant. What's interesting about this is that blip on the left side. That's the Spanish flu, that pandemic that occurred in 1918, which disproportionately impacted younger compared to this one that's impacting older individuals. But that blip on the left side is the Spanish flu that had a significant impact on life expectancies. But the purpose of the chart really was sort of that right side. Our society is getting older and we have some long-term care needs. There was a Harvard study that was done that it's not just being healthy, but loneliness is important and having some social interaction. And it's important, and that's part of what the at-home program is providing you with the care coordination, with the membership. It doesn't matter whether you're at home, whether you're in a life plan community, but maintaining that socialization really is critical in terms of your health, in terms of your happiness, and it significantly helps in terms of memory issues. And dementia, the isolation that occurs really has significant impacts on dementia. So it really is important to be in a group, and that's where the at-home program can have some significant impacts. That Harvard study was a little older. More recently, ARP did a study just last September, and they said that the respondents said only 7% said they would prefer a nursing home for family members, and 6% said they would prefer it for themselves if they got to that point. So if you don't want to go to a nursing home, so we have 93% that don't want to wind up in a nursing home if they have nursing home needs. What's your option? And that's really where the at-home program comes in, is an option to help you avoid that nursing home when that need arises. And it will arise for a number of people. And I'll discuss that a little later. So seniors are looking for alternatives. They don't want to wind up in a nursing home if they have those needs. I started working with at-home programs a little over 20 years ago. So I had a community come to me and wanted to discuss starting an at-home program. And they said, we're going to manage down care and we can bring that care into people's homes. And I'll admit, I had a little bit of skepticism. I helped them develop those initial programs. But in terms of how successful they were going to be, they were far more successful than I thought they could be. It's remarkable how successful they are at managing down care, not avoiding care, just providing care in a different location. And so the same care is occurring, but it's occurring in your home instead of in a skilled nursing facility. And when we look at the statistics, we see the same amount of care occurring. It's just in a different location. And it really has been remarkable how successful these programs have been in accomplishing what they initially set out to do. So we talk about this continuing care at home. What does it include? And I highlighted that care coordination because honestly, that's the biggest aspect of this program. You get connected with a care coordinator as really before you sign up. And that care coordination is a key focus of the program, and it's around what do you need to stay healthy, when your health status starts to decline, what is the best care and what is needed so that you can maintain the highest quality of life. Within that, the care that's brought in, they do a home inspection up front. They provide medically necessary transportation. And then they can bring in home health aides, companions, live-in companions. So there's a whole host of sort of long-term care services that can be brought in directly to the home. If you need it to be maintained from a safety standpoint, if you do need to go to facility care, that is covered through the program. But what we found is very few individuals wind up in facility care. Almost all care can be done directly in the home. So that care coordination, if you have a long-term care policy, almost all policies mention that they have care coordination. but it's fundamentally different in terms of an at-home program care coordination versus the long-term care policy. My company does work for 8 different long-term care insurance companies, as well as the at-home programs we work with. And what's meant by care coordination in a long-term care insurance company is what care do you qualify for under the benefits of your contract. And what's meant by the continuing care at home care coordination is what do you need in terms of your health status. It's just a fundamentally different way to look at the care coordination. And that long-term care insurance company care coordinator, they're not even talking to you until you have an event. So you're already going to the skilled nursing facility before they talk to you and decide what do you qualify for. Whereas the care coordinator with the at-home program is talking to you as you're healthy, and they're having conversations with you over the years. They develop a relationship with you. They know what you want. So that relationship is just a fundamental difference between a long-term care insurance company and the at-home program. That's not to say there isn't a benefit to the long-term care insurance if you already have it. I have long-term care insurance. Actually, the at-home program can integrate well with long-term care insurance. One is in that care coordination. You bring in that what do you need aspect of that care coordination that will stick with you for the rest of your life. So that's a key difference, that you can use that integration. And there's ways to sort of wrap around that benefit that's offered with the at-home program with the long-term care insurance. Depending on what your benefit is on the long-term care insurance, you can get that low benefit model with the at-home program and sort of use that as a wraparound to your long-term care benefit. Or I know a lot of programs, and Hunt's one of them, that if you have long-term care insurance, they'll give you a discount for that benefit that you're getting from the long-term care provider, because the at-home program would become the secondary payer behind the long-term care insurance. But it then gives you sort of coverage from day one, where it's most at-home, where most long-term care insurance programs have that deductible period. So the at-home program would cover that early period and then cover anything that sort of fill in the gaps around that long-term care insurance. And they will give you, they'll give you a discount on your monthly fee for being that secondary payer instead of the primary payer. And you still get to take advantage of that care coordination.
That's great.
So the big question I have often is long-term care costs. Do we really know what it costs? And how large can those tail expenses be? And part of it is the experience of the long-term care insurance companies. And you sort of can't get around it. A lot of long-term care insurance companies have had issues, and it's largely actuaries' fault. We'll take the blame for it. But it's not what people think it is. It wasn't the care costs that they missed on the assumptions. The care costs were slightly higher than what they had initially projected when they were pricing long-term care insurance, but it was within the range of what they expected. The margins built into the insurance would have covered it. They missed on 2 assumptions. They missed on how many people they thought would drop the program. They thought more would drop it than did. Consequently, when I'm doing at-home work, I assume almost nobody drops the program. Because I don't want to make the same mistakes as were made 30, 40 years ago with long-term care insurance. And the second assumption is a lot of these long-term care insurance companies were priced in the late 70s. We had high interest rate environment, and they used 2 high interest rate assumptions, which ultimately didn't pan out. And so you do collect money up front to pay benefits later on. And so there were some assumptions made on those investment earnings that just didn't pan out. And so that really impacted the pricing and the reserves for those long-term care insurance companies. So I try not to make those same mistakes, try to learn from our history here. And so I am a little conservative on how many people drop out of the program, as well as on that investment income, because we do want to appropriately reserve for future claim costs.
Mm-hmm.
So, but from that experience, so I do work, I mentioned we do 8 long-term care insurance companies. I do about 70% of the at-home programs in the country, and my firm does around 50% of the CCRCs in the country. And as I look at all that data, what's really remarkable is how similar it is if I break it down in terms of what the healthcare needs of the individuals are. So I can sort of layer on top the long-term care insurance, the at-home program, the CCRCs, and those needs are very similar. Just where that care is being provided is what's different. And the at-home program is providing most of that care in the home. And we also see that with some Medicare data that we have. And so this data covers over a little over 20 years, 21 years. And you can see that as they look at their database, the Medicare database, and ADL is activity of daily living, and they look at sort of, so that's the health status of the Medicare beneficiaries over a 20-year period. You can see it's fairly consistent. We do know how much health care is needed within this population. So it's not a question of how much health care is needed, it's how are you going to deliver that health care? And that's really, and so with the at-home programs we've worked with, we do understand how that care is being delivered and what that cost is. So we do have a very good understanding of the healthcare needs as well as what those healthcare costs will be going forward. There's no getting around. You saw that prior chart, the Medicare beneficiaries, 40% have some level of activity of daily living need. And so there's sort of no getting around that long-term care is expensive. Whether it's in a facility, whether it's in your home, there's a substantial expense if you need that care. None of us want to have that care, but as we age, if you need that care, there's sort of no getting around that it is expensive. And so the advantage of the at-home program really is sort of a peace of mind with some fixed costs, and we do have inflationary increases built in. It's easier to plan for that long-term care expense versus that in that moment, a substantial expense that can occur because it is expensive.